Hi guys, before I proceed, this is not investment advice. I'm not a financial advisor. Do your own research and on any investments that you do. This is a simple investing plan that I'm doing, and it's £10 a day into free ETFs. I've been doing it for 3 weeks now, and I've actually invested £630 so far, and we are actually up £5.38. So if we go to the self-managed part, here we go. There's a little graph there. You can see where I've put the money in, and it's gone up. And if we go down, here are the three ETFs that I've put it into. We put it into the Nasdaq 100 EQQQ and the Vanguard VUAG, which is the S&P 500, and a JEP Morgan Premium Income, which is a covered call ETF. So if we just go, on the JP Morgan one, this week, coming on the 5th of December, we'll be getting our first dividend from them. And it pays monthly. And I'll also show you what I've got. I have another account with Trading 212, and I'll show you what my dividend next week is in the Trading 212 account. And it's a little bit more than what I've got here. And if we press on this one here, because I'm messing around with this to learn it myself, if you'd have bought EQQ back here, you can just see, I'll just tell why this one has done. Back there, that's when Trump was messing around with his bloody tariffs. The idiot. Anyway, enough said about him. We go back here, and if we go up to this one, I have VUSA personally, but this is VUAG. The difference being is that the dividends are automatically put back into your account to purchase more VUAG. So I personally have mine. I got mine back in March, and that's how much I paid for them. And they're now up here, and it's gone up substantially in um, my Vanguard account, because I also have a Vanguard account, and I will show you at some point how much that's gone up. It's spectacular. So let's go back to the other one and go back button, and let's go into JP Morgan. Now with this one, there's a big dip, obviously, where Trump did his bit with his tariffs on the end here. It only started um, last year, tail end of October, really. And the difference between it did go down quite a bit, but the difference between here and here is actually the FX fee. So that's the foreign exchange rate. So we did get hit quite badly in the UK with that. However, it recovered. If you bought here, well done. You made a bucket load. Anyway, so let's go back up here. Back button is what we need to do. Right. So next week we'll be getting our dividends from this, and if I go up to JEPQ here and just bring it over on Trading 212, and so for every share you have, which at the currently is $26, although we've got it in pounds, I think, on Invest Engine, you will receive 0.231 cents. And if we go to here, previous one which I've received was 18 cents. There is an American version of it. If I just click here, and there's the J. That's one let's type it in. JEPQ. There's the American version of it. So we click there, and we'll find it down here somewhere. JPQ. There's the American version. It's a bit more expensive. Let's get it back in line. Now the difference, I think, with this is that when they get their dividend announcement, they get theirs virtually straight away. In the UK, we have to wait ages for it. If we get it back up here, there's our dividend call here. So the tell us it's going to be, well, it's on the 13th of November. We have to wait till Friday, the 5th of December, before we get ours. I think it's a bit of taking the mickey a bit, really. Always made to wait in this country. There's a line I drew there, which is for the JEPQ of what I'm expecting it to rise. With JEPQ, as it is a covered call ETF, it doesn't go up like you would expect stocks to go up. This is all about the dividend. But the good thing about this, there's no NAV erosion. It will go up over time, which means the value of the dividend here will also go up. So if you hold this for 10 years and this goes up to what the American one is, if it manages to get to, say, $58, you should be getting 39 cents per share. So it's one to hold on to. I've worked out that to retire, I would need around 20,000 shares to retire comfortably. Right, so let's go back again. Let's go back to, oh, let's show you Palantir, because this was interesting. Palantir, I was looking at this earlier on, and at the current time, it's, is it 168? So let's have a quick look. Here. Yeah, 168.45. If we go to the super charts, and for some reason they've gone all over the place, but no matter. I don't do much stock purchasing and buying. So this, I believe, was at it's when it was at yeah, around here. No, I sold around at 208, and I sold at 208 because when it was at its earnings, it didn't appear to want to go up. I thought, oh, with trading 212, you have 24-hour trading. So after I did after hours trading and sold at 208, only to find the whole thing dropped. So that was a bit of lucky timing from me, but you can't time the market. Don't even try it. You'll lose money. So there we go. If we go back to the invest engine. So next week we'll be adding another £210. That's to put into each of these, and hopefully it will go up again. Although December tends to be a quiet trading period. Anyway, um, I don't really like trading. I prefer to invest, and that's where I made most of my money. Because timing the market is better than trading if you don't know what you're doing. And when I started out, I had no idea what I was doing. And I'll also show you some of the trades I did, of which will make you your eyes water, because it certainly made me think. And that's why investing like this, dollar cost averaging, I believe, is the best way for, well, it's the best way for me to do it, because it can't be investment advice, can it? Anyway, please subscribe to my channel. If you've got this far, that's amazing. If you haven't, well, you won't hear this then, will you? Anyway, have a good evening, and over and out.